There is a trade within every 4-hour candle, but 99% of traders never see. So in this video, I'm going to show you the strategy that has made me over $300,000 in payouts and has over 80% win rate. It is simple and repeatable and shows up at the same time every day. So by the end of this video, you'll know exactly how to execute it yourself. So stick till the end. So right here, you can see my results that I actually accumulated over the last few months. So you can see the win rate is over 80%, and you can see right here over $134,000 in just few months. So the goal of this video is going to be for you to have a profitable strategy that is easy to follow every single day in the market. It is going to be to execute trade flawlessly with a precise entries, and it is going to be to trade with rules and data so we can keep emotions away. So every single day when you come to the charts, you know exactly what you need to do. So the one concept that every single trader must know, and it seems very simple, but yet so people just do not understand what it actually means. So here we have a simple candle, but this candle actually shows us where it manipulated and where it expanded. So we need to truly understand what did this candle do. So for example, the first thing that you notice is that this is a bullish candle, which means that this candle opened right here and then it went to the upside, making it bullish, and closed to the upside. So we have a simple bullish candle. But what a lot of traders don't understand is that the wicks are going to actually show us something very valuable. So on a bullish candle like this one, we have a wick to the downside, and what a wick actually means to us is that wick actually manipulated the market towards the downside, made everybody think that this is going to be the bearish candle, and when it came to here, it just suddenly reversed and started completely going to the upside. So in every single candle in the market, you're gonna see wicks that actually tells us where it manipulated and how did it actually react. So for example, when we have a bearish candle like this, we know that it went to the downside, which means it opened at the top and closed at the bottom. So we know that this week right here, we manipulated a lot of traders, we maybe manipulated some kind of levels, and then after that we just completely reversed to the downside. So what we need to understand is that when this manipulation is happening either to the upside or to the downside, for example, we then need to look for an opportunity for an expansion towards the upside to actually complete that candle. So this is everything that is actually happening within a single candle. So this is a 4-hour candlestick right here, and what is happening inside of it is power of 3 concept. And what does that actually mean is when candle opens, for example, right here, which is our bottom of this body, what then happens is we are going to just range or do something which is not that important for us, but what we want to see is when we actually do that manipulation. So at one point, which you're going to see later on the examples and on the everything, at one point when market is going to accumulate enough buyers or sellers, then what it's going to do, it's actually going to manipulate. And what I mean by manipulate, it's going to actually stop everybody out by making a move to a direction that it actually does not want to go to. So we are going to make a move, manipulate everybody out, because all of them are going to think that right now market is either going to, start dropping or something. But what actually market is going to do, it is going to sweep all the stop losses from the bottom of the accumulation, and after that we are going to of course get our entry and expansion of the candlestick to the upside. So right now we know that the 4-hour candle is consistent of accumulation, which is going to be just accumulating buyers and sellers in the market, followed by a manipulation either to the downside or to the upside. And when it does that, we know exactly where it's going to expand, because we know that it's going to expand really likely in the opposite direction. Of course, if we get enough confirmations, we are going to enter it and we are going to be sure that it's going to actually expand that way. But what you need to understand right now is that we always want to see the manipulation, and then we are going to wait for the expansion or the distribution to another side. So the 4-hour candle times are actually 6 a.m. So this is Eastern time, 6 a.m., 10 a.m. and 2 p.m. And what does this mean? So this means that at these hours, we are going to maybe have an opportunity to enter the market. So we always want to spot what the 4-hour candle is doing, in what stage is it, did it yet manipulate to one side, and then what we do is we scale to the lower time frames and get an entry when the market is about to distribute or expand to the upside and make the actual body. So understanding this allows us to look for the exact same setup at same time every single day, because during these times we will always look for the same pattern. We will look for manipulation right after the market open, because that is where we are going to trade, and then the confirmation for the entry. So market open, there is always a manipulation to one side, and then when the manipulation happens, we know exactly what to target target and which direction to then trade towards to. So this is a setup that we are going to see in the market. So when we manipulate, for example, to the downside, you can see that we swept a low right here. What do we then want to see? We want to see a fair value gap, which is an imbalance in the market. They like to get retested and they like to reject the price. So when we sweep and manipulate a low, we want a bearish fair value gap that should ideally push the price like this to the downside. We want it to fail, to basically get disrespected, and that is going to tell us that right now market manipulated its move right here. It disrespected a fair value gap, and right now market has to go to the upside because it actually disrespected something that should push it to the downside. And the same for the bearish example, when we sweep or manipulate a high in the market and make that manipulation of the 4-hour candle, what after then happens is we have a bullish fair value gap, so a fair value gap that should push the price towards the upside. And as soon as it fails, we know that the market wants to go to the downside, because why would that fair value gap fail if the market did not want to go to the upside? Because it would just react out of it and continue going up, but it failed, so we are sure that the market is going to start reversing and going to the downside. So how do we actually align everything that we learned into a trade? So the first thing that we want to do is we want to mark out highs and lows after the 9:30 Eastern time. So we come at the charts at 9:30, and what we do is we mark out our highs and lows in the market like this. So what then happens after the 9:30? We get that initial manipulation to one side, and then followed by that, what we want to see is the pattern that I talked about, a fair value gap that is going to get disrespected exactly like this. And what do? We enter the position and we target the opposite liquidity for that expansion or the distribution move, for the actual candle to get made. Okay, so let's right now check out what is happening right here. So you can see we just came in the market before the market open, and what do we want to see? We want to see a sweep to the downside or to the upside, and then followed by a expansion to another side, of course targeting something, either fixed risk to reward or some kind of liquidity levels that we marked out previously. So for example, right here, if we want to mark out high, this is going to be our biggest high right here of this range, and then if we want to mark out low, this is going to be our low. So what right now we want to see? We want to see a manipulation, because this right now is that phase of accumulation that we talked about. Right now we want to see either manipulation to the upside or to the downside, then followed by a distribution phase. So let's see what is market actually going to give us right here. So looks like we swept to the downside, so this is going to be our manipulation after the market open, and now all we are waiting for is for an entry to get into the distribution phase. And then how do we tell that we are going to enter the market? We told that we want to see a fair value gap in the market getting disrespected. So you can see right here we have a fair value gap that is of course a bearish one that should push the market to the downside, and if it fails, then we want to long the market. So let's see, and right there we actually did disrespect the fair value gap. We put our stop loss either below the candle or below the body, doesn't matter. And what do? We target to the upside. So we can target fixed 1 to 2, 1 to 3, or we can target the liquidity level. It's all up to you. So for example, if you are going to target this liquidity level, let's see how is this trade going to play out. So you can see that right now it is floating really nicely, and it hit take profit really actually quickly for a huge risk to reward, so more than 4.3 risk to reward. The charts right now, when we know how candlesticks are functioning on the higher time frame, we know that we need to manipulate towards the downside or towards the upside to then of course expand in a different direction. So for example, if we check out the chart right now, what can we see? We can see that we have a biggest high right here on the chart, and then we also have low right here. So this is some kind of our range that we want to see the 4-hour candle actually manipulating between, and then of course closing in the end with the distribution. So the first thing that we do is we just play the market forward and see what is going to happen. So you can see that right now high was left right here, so we never swept it, but we actually took this low. And what can we see? That the last 50 minutes, so we are on the 15-minute time frame looking for the entry. So what do we see? We see that we left this fair value gap right here. So what we talked about is if we disrespect this fair value gap towards the upside, that means that we can enter potential long setups. So right now looks like the market is going, and there it is. So market actually did inverse that setup. So what do? We enter on the closure. Right now we can put our stop loss either below the candle or below the fair value gap like this. And what can we do? We can target either this liquidity or we can target a fixed risk to reward. So for example, if we targeted 1 to 2, we can even target maybe bigger than that 1 to 3, because we can expand that this candle is going to of course expand a lot after this manipulation. So for example, if I play for the market. You can see that beautifully 1 to 3 got hit, and maybe even more if we wanted to target more. But of course, the bigger the target is, the harder your take profit is going to get hit, which is of course really logical. So you're basically seeing how easy this model is to spot on the chart and how actually it makes sense for those manipulations to happen before the distribution. But before I leave the video, I gotta ask you, if you like the video, if you learned something new, make sure to subscribe, to like, maybe comment some questions. If you have, I will respond to everything. And also, if you want, you can claim my free playbook down there in the description, where it's just a whole breakdown of the strategy in a PDF. And one more last thing, that if you are maybe interested in working with me one-on-one, there's gonna be a link down there for an application where you can basically apply to work one-on-one with me. And of course, if there is spots left and if you are a right fit, you may get it. And yeah, basically with all of that being said, I'm gonna see you in the next video. Peace.